Starting with the markets today, ending another week in the red.
But we're taking a closer look at the state of the economy as high inflation impacts everyone's finances. So that leads us to sort of the big question. Are we actually in a recession?
To be receiving a letter to say that I've been selected to be redundant is awful, petrifying.
Are you worried about the recession and don't know what to do with your money? Well, stick around until the end, as in this video, we will be talking about this current downturn and what exactly you can do with your money. You see, the recession related to COVID-19 was just 2 months long, which is one of the shortest. However, just like other recessions, it affected many of us, and currently, the economy is also heading toward another similar situation. So, it is the perfect time to discuss how we can save ourselves from this potential recession and take some benefit from it as well. If anyone tries to comprehend the particulars or the technicalities, it is very much likely that they are playing a guessing game. And there is high chance that they are trying to sell you their story. So, what you can do is to build the context. You can utilize the history details and act more preemptively about how you can control money while not getting panicky. It also contains assessing the information from the previous recessions and having more views about your financial goals so that you can be aware of what you will require to be on the right track. To help you in that regard, we have gathered 10 things that you can do with your money in a recession and get financial stability regardless of the economic condition. But before you learn what to do with your money during the recession, pay attention to the big red subscription button. As soon as you click it, you will be taken to the wealthy side, the life you deserve, where you'll find hundreds of videos. These videos contain the answers to almost any question you may have. There are also daily updates, so if you want to stay tuned, remember to turn on notifications. Number 1. Don't panic and start planning.
The problem is we don't know what kind of slowdown we'll get. Will we get a soft landing? Real estate goes down a little bit, jobs just slow down a little bit, or do we get a hard landing where a lot of people suddenly get thrown out of jobs?
First and foremost, it is important that you should not start panicking. The break in the clouds in this current scenario is that these predictions about recession are still predictions, or it's safe to say they are forecasts. That means you have time to create a plan for yourself without the actual pressures and challenges that are inevitable with being in the middle of an economic crisis. So get yourself ready and plan in the next coming months, review your financial plan, and sketch out some worst-case circumstances when your adrenaline levels are not much increased. In addition to that, there are some questions that you have to ask yourself. How will you be able to build your finances now for the holiday period? And in case you lose your job in the coming year, what will be your plan? Well, don't despair. You will get answers to these questions in the coming points. Number 2. Keep your valuables safe. This advice is effective from the late 1970s as it was coming from the surprisingly elevated inflation period of that time. And even in this current scenario, this advice is still very convincing and says, if it is not broken, don't fix it. Due to the continuous problems related to the supply chain, we face several issues like soaring prices and delays in acquiring products. Whether it's a car or tech product, home materials, or even contact lenses. It contains the replacement parts as well. What you can do is first avail free warranty that comes with products, give priority to such products, and sign up. Furthermore, if there is a nominal fee for extending your insurance, it might be beneficial in the long run when the prices are going to be high. Let's say your car is in the repair shop for more than 3 months and you're waiting for the parts to arrive from overseas. In this scenario, you will be paying an additional payment of the rental car fee along with your monthly car payment. So, regardless of anything else, you will be more cautious in case of a recession.
You run into this situation where inflation is so high that even when you start to predict recession, you still have to raise rates. So that's the real fun police. So for us and for me, there's a real probability of recession.
Number 3. Reconsider purchasing a house. Even though the prices of homes and properties are somewhat cooled in different places, but it is still a very competitive market with limited options. So, if the increasing mortgage rates are putting pressure on your ability to purchase a house inside your budget, then it is a wise option to go for renting for an increased period. And if you are worried about losing your job too in a potential crisis, then it is a much better reason to stop yourself from buying a new house. Not only that, but leasing can also be a good choice at this time, although it is not that economical. However, it is going to provide you with a lot more flexibility and mobility. In addition to that, you don't have to gather cash for the down payments or closing costs. And with renting, you will be able to save more liquid even in any economic downturn. Number 4. Improve your credit score. In an economic slowdown, the recipients may face a tough time getting credit because, at this time, the banks start enforcing strict lending rules, which also increases the interest rates. To qualify for suitable loan terms and interest rates, try to improve your credit score to above 700. Along with that, you can check your credit score from time to time for free with your lender or existing bank. Also, you can get free credit reports every week from the 3 major credit bureaus through the end of the year from annualcreditreport.com. And to improve your credit score, make sure to pay your high balances on time. Review the errors and clear the disputes that are affecting your credit report. Additionally, go for the 0% introductory APR balance transfer card or try consolidating high-interest credit card debt into a lower-interest debt consolidation loan. Enjoying till now? Please hit the subscribe button now, like, share, and comment. And yes, keep watching. Number 5. Utilize the dollar cost averaging. This is another great thing to do with your money in case of a recession. Well, dollar cost averaging is a kind of investment strategy in which you purchase a fixed amount of investment regularly, irrespective of the current price. And the economic slowdowns are amazing opportunities to utilize this strategy of dollar cost averaging, as you'll purchase the shares as the price declines. Moreover, you'll be able to dollar cost average with your money or also set your dividends to reinvest in the security automatically. Number 6. Lock interest rates immediately. To decrease the level of inflation, policymakers increase the interest rates. And this is really bad news for people with adjustable rate loans. Not just that, it is also challenging for people who carry balances on credit cards. At the same time, federal student loan borrowers do not have to worry about these increasing rates. However, those who rely on private variable rate loans might have to consider refinancing options or consolidating through their banks or lenders like SoFi and others. This will help to consolidate the debt into a fixed rate loan. Also, it is going to save them from the monthly payments, which will be increasing out of the blue when the Federal Reserve increases the interest rates in a recession. Number 7. Avoid impulsive investing moves. Indeed, it is not easy to be worried about your portfolio after seeing just the red arrows in the stock market. History proves that sticking with the market's ups and downs is a better move if you have 15 to 20 years to retire. In the financial crisis of 2008 and 2009, the statistics from Fidelity indicate that people who continued to invest in target date funds, including mutual funds and exchange-traded funds that are generally related to retirement dates, had higher account balances by 2011 compared to those who stopped or reduced their contributions. In addition, Linda Davis, an investment professional and author of The Business of Family book, said that people who panic and sell at the lowest price will lose money. Most of the time, they regret timing the market since they see losses that are difficult to recover, as stock prices can change rapidly. Make sure to talk to your portfolio manager or online broker about automatic rebalancing if you haven't already. In this way, if any market swings occur, it will help you to keep your instruments appropriately weighed and according to your investment goals and risk tolerance. Number 8. Go for an additional income stream. Well, having a second stream of income can be very beneficial for you, and that's why side hustles always remain one of the popular searches on the internet. However, specifically, in this period when we are facing a potential downturn, many people look for diversifying their income streams. It is pretty much similar and also equally beneficial as diversifying your investments. Diversifying your income stream will be able to minimize the volatility of income that you might have to face in case of losing your job. So, whether it's about starting your business online or doing marketing, there are dozens of things to choose from that can make an additional income stream for you and can help you build confidence regardless of what the economic condition is. Number 9. Boost your cash reserves. Maintaining cash in the bank is key to coping with the recession. An outrageous unemployment rate during the Great Recession in 2009 taught us this lesson. And according to stats, it took 8 to 9 months on average for the people who are affected to get financially stable. Housing costs could be paid by those who had robust emergency accounts, and they could buy time to figure out the next steps. So for that, you might want to rework your budget now to save more to be able to save at least 6 to 9 months in rainy day reserves at the end of the year. Number 10, make your investment portfolio diversified. As we discussed earlier, diversification is an important aspect. It can help you to avoid many problems and make money. You see, if you don't have a diversified portfolio and decide to put money in a stock and see it dropping down, putting your money out can be risky. So, sticking to a single investment is not a wise decision.
And the classics are, we want people to have an emergency reserve fund. Some more money into your retirement account, it's a really good time to get into that habit.
Go for a diversified investment portfolio like index funds or S&P 500 index funds. According to financial experts, if you go for a well-diversified index fund, then you are not limited to one potential market. Instead, you are betting on the whole market, and it reduces the chances of losing to a minimum. In a nutshell, economic slowdowns are an inevitable part of being in the financial world. They can have major effects on many people and can also be unpredictable. However, if you follow the points discussed in this video, you will be able to position yourself better and can also benefit from this situation as well. Did you enjoy the video? Please hit the subscribe button, like, share, and comment.